Hello and good morning. Hello and welcome back to an SF Weekly Wrap Up. My name is Kai Hoffman. I'm the JR Mining guy over next, of course, the host of the Soar Financially YouTube channel. Really appreciate you joining us here. I'm sitting yet again in a hotel room. This time I'm in Singapore. I'm in transit. I'm on my way home back to Germany. Had the pleasure of spending about a week down in Australia, visiting 3 different projects. And then attending a mining investment or mining conference. I wouldn't call it an investment conference because that was only a little side part of the event down in Sydney. We had a wonderful time down in Australia. I think if you follow me on X, you might have seen some impressions already. I've visited, as I said, 3 companies, very different companies, very different approaches, very different styles. One was just north of Melbourne. It was called Golden Cross. They're listed on the TSX Venture, actually. The next one was Copper Corp down in Tasmania, very different yet again, chasing IOCG style project targets on the west coast of Tasmania, which is seemingly completely ignored by not the market, but it's one of those virgin territories, which is really interesting. I had the pleasure of catching up with one of Robert Friedland's geologists, who's absolutely excited about the potential in Western Tasmania. Even the local universities haven't really looked at it, so really, really interesting. Following that, I flew up to Dubbo, which is New South Wales, and I had the pleasure of inspecting or visiting with Inflection Resources. They are chasing under sediment targets together with AngloGold Ashanti. Very different because there were no outcrops. There was no outcrops. Unfortunately, they were not drilling at the time. So, of course, without a drill, it's a bit less scenic. But yet again, fantastic approach to the matter. Really interesting territory. I hate using the term elephant country, but they're in the right terrain. Cadia, North Parks, quite a few larger mines in the area next door as well. And you all know the saying: the next mine is found usually in the shadow of the head frame of another mine. So looks really interesting geologically, of course, as well. I'm not a geologist, but the approach is fantastic, and I like the team behind it too. So that was interesting. And then I flew down to Sydney for a mining conference. Had some meetings down there as well. Not too bad, but it wasn't a mining investment conference. Not really my cup of tea. But if you're into technology and mining technology, you could spend 3 full days there exploring new tech, new ideas, and to talk to some of those companies that are providing those services. It was interesting, but not the main focus here. So really good stuff. Rambling on here, but let's talk about the topics. What have we seen this week? Of course, the main topic is the major gold and silver price drop. And my conclusion, if you follow me on X, is simply it was overbought. There's no other real reason for it. Gold and silver ran extremely hot. We were overextended, overbought numerous times. And I don't know how many percent we were away from the 200-day moving average. But I think it was a logical correction. Gold and silver seemingly have stabilized here. Before we get into some of the details, what I've been looking at here, probably not something too much, not too new in terms of content, what you've been hearing over the last few days, because if you're in the gold and silver space, you must have caught up on what has been happening, what has been driving this. But I want to just summarize like my opinion and share that with you as well. But before I do that, of course, let's always take a look here at the calendar. What did we see? What kind of data did rain on us? The U.S. government still shut down. What is it now? Week 3? What is it? It's October 24th, your Friday, 7:56 a.m., October 24th, where I'm at. The government is still shut down. Later today, on October 24th, we'll get some inflation data, which could be interesting because a Fed meeting is, of course, happening next week, October 29th, and the Fed will use that data as a basis for their decision-making process. Personally, I'm not expecting any surprises. We had 2.9% before, forecasted 3% to 3.1%, unless that it jumps to dramatically higher. I don't think we'll see any surprise from the inflation data, personally. Not much going on. As I said, the government is shut down, still no unemployment statistics, and the core inflation data is the main impact driver here. That will come out after the recording here of this interview, of course. On the geopolitical side, there are a few things, of course, that we need to talk about as it impacts us. Let's switch to this tab here, and it's the oil price. What is happening here? Oil is up 5.4% as we record this. The U.S. has issued sanctions on 2 major Russian oil producers, Rosneft and Look Oil. Rosneft, the second largest oil producer in the world after Saudi Aramco. This is having massive implications. And what is interesting, of course, are the secondary sanctions. So no banking or anything allowed with those producers. That is driving prices up higher. But we're still only at 62 or 61.5, $62 here per crude oil barrel. Why do I mention this? Because it could have an impact on all-in sustaining costs for our mining companies that we follow, and that's why we look at this and other geopolitical implications, as well as the U.S. has been pushing sanctions on China and Russia as well, whether they're allowed to refine and work on Russian crude oil exports. So that's something we definitely monitor over here at Soar Financial. It could have an impact on the costs, underlying costs and margins, of course, here for those producers. That's pretty much it. Like on the geopolitical side, we could talk about in detail the sanctions, but Russia summit has been postponed. It hasn't been canceled, but postponed. President Trump was supposed to meet with President Putin out of Russia, but that meeting says, well, it's going to be worthless if we only just talk. I think Trump has learned his lesson from the last few meetings and conversation that nothing's really changing on the Russian side, and now he's increasing the pressure on the thumb screws here, and by issuing those sanctions just to bring Putin to the table and actually make a change. So, long story short, we got to talk gold. Let's move over here. Let's share this tab. Let's take a look at it, folks. Gold price is at 41.20. It has stabilized. Silver as well. We'll get to that in a minute. Of course, massive drop the last few days here. It was kind of spooky waking up to a 5-6% drop or it actually was higher, 6-7% drop, 6-7 drop here in the gold price. Over at the beginning of the week, momentum was strong in both directions. I've posted that Yoda meme there. Strong the gold price momentum is, but it's strong in both directions. Extreme volatility, which is normal in a bull market. Also a bit of nervousness that I'm still sensing from investors that are in our space. Do we trust this rally? Is this for real? Same with the mining stocks. We've all been hit way too much over the head. You can probably tell. We're all burned children here. And the generalists, yes, they're in, but many of them it was just hot money. Maybe some of that was Bitcoin, some of the crypto investors that shifted after that crypto crash 2 weeks ago or 10 days ago. So normal behavior, a lot of momentum. Some of the air has been left out of the balloon, and I think a lot of explanations that the smart end of the market is trying to come up with, like, but the dollar price is much stronger. It's like, no, I'm sorry. It's like the dollar price has nothing to do with it. Yes, it has gone up in that time based on U.S. sanctions against China and the saber rattling that's been happening on the tariff front again, but. Sorry, like that had nothing to do with it. The dollar price was fairly stable throughout this whole rally. Yes, it's down year over year. And let's take a look at it. I might as well just bring it up here. The Dixie, I've got it lined up. But look at this. Like this gold price rally has nothing to do with a declining or a rallying gold price. Yes, okay, the Dixie has moved up from 96 back to 98. That's 2 points. But I'm sorry, in the grand scheme of things, not a change. Absolutely irrelevant. I think the main topic still is profit taking after a massive rally. We've had a lot of investors, a lot of hot money come in, and that's why it happened. And that's why we're seeing a stabilizing gold price here as well, as the fundamentals are just still intact. Nothing has changed. We still have a shutdown government. We will still, and Jerome Powell, like last I heard, and they're currently in blackout, they're still about to cut twice this year. Let me bring this up here as well real quick, perhaps, is that just a Fed watch. Should have mentioned it earlier talking about it, but we're 5 days and 17 hours from the next. It's just loading here. I'm sitting in a hotel room. So current target, and that's here for the October 29th meeting. We're currently at 400 to 425 basis points. 1% cut is absolutely priced in. Let's take a look at December. Another cut, 93%, also priced in, 93%. So we're still in the right, the trajectory is still the same. Fundamentals have not changed. Let's take a look. Let's bring this chart back up. So do I see a reason to panic? No. 4,000 has held, I think. And again, I'm not a chart technician. Go check out Gary Wagner, Christopher Mullen, Gareth Soloway, whoever you like to prefer. Everybody has a different approach to chart analysis. But my very crude approach is just looking here. 40.38. Yes, it's held. That's what I've actually seen intraday. This is the level around 4,000, 40.30 is the level that we need to hold before we maybe break down a little further. But are we worried? Am I concerned? No, not yet. Again, we've got 5 days until the next Fed meeting next Wednesday, and we'll see what Jerome Powell, of course, has to say there. Let's take a quick look at silver. As we all know, silver reacts way more aggressively. It is way more volatile. It was down 7 to 8%, even down 11% and more in trading. So it rallied from about 54.25 to down. It rallied. Sorry, that's the wrong term. It crashed. It looks like a nice little middle finger chart, doesn't it? Question is, who is it flipping off? Better not be us, precious metals investors. But again, it is in that support range. That's where I see chart technical support, and maybe a little lower here as well. But it has held up decently. What other factors? Easing geopolitical tensions I've written down is like absolute rubbish. I'm sorry. Middle East is a mess more than ever. There is a peace deal, but we all know, is it really a peace deal? Israel is still flying attacks on Gaza. Gaza is executing its own people. Like, sorry, that doesn't rhyme. Nothing's changed there on that front. And then what did I write down? Oh, Bloomberg mentioned overvaluation concerns. Overvaluation concerns against what? A declining fiat currency. I think the trend on the fiat side is clearly visible, and we've talked about this numerous times. Overbought against or overvaluation against what? Yeah, it's rallied quite a bit. It was overbought, but overvaluation. I think Egon von Krainer said it. It doesn't really matter because if you value it in gold, I think that's the wrong metric. Yeah, I think he used the terms like cows, chickens, and maybe cake or something that we should value gold against to get a better perception. And I do like the in gold we trust Oktoberfest beer price index as well. So maybe we should measure gold more in those categories than against the dollar, because I think we're trying to make up explanations here that just do not exist. So I'm not too worried about that part. What else have I written down? Not too much. We got some financing data. Some quarterly financial news come out of Newmont. Let's take a look at those. They always present their there we go. Summary of third quarter results. Maybe let's start with the first one here. Hope you can see this. Yeah, that looks good. Of course, this is the big number. Q3, about $220 higher in terms of average realized gold price, which is fantastic. But one thing that personally I don't like as much, and maybe the market as well, because the stock is down, is this part, attributable gold production. It is declining. Is that something you want to see? Not really, but keep in mind, Newmont has been divesting a lot of assets to Discovery Silver, Orla Mining. They just sold coffee as well, which is not in production, but they're selling a lot of assets. They're selling off, but they're not making up here on the gold production side. And maybe that's the reason why, and let's share this tab here. The stock is down after hours, 5.3%. Apologies, been traveling too much. The stock is down 5.3% after market. And maybe that's the reason why. Let's come back here to the gold production numbers here. But all-in sustaining cost on a co-product or byproduct basis here is 1566. It is declining. Also has to do with a lower gold price, of course, as well. But attributable gold production down here decreased 4%, driven lower gold grades, not great, and planned shutdown at Penasquito and Lihir. Those are things we don't necessarily want to hear. Long-term outlook is fine, but let's see where the big number is here. First, of course, net income per share. It was a massive beat against estimates. It's jumped up another 30% or 30 cents over Q2, $1.71. So it's coming in very, very nicely. Adjusted EBITDA. I'm just looking here for this one. The free cash flow is 1.6 billion. Let's see. Let's scroll down to number 7. Let's see why it is actually lower versus Q2. Maybe that's the other. Where's number 757? Free cash flow decreased 8% from the primarily due to a decrease in net cash provided by operating activities as a result of unfavorable. Okay, there we go. There you have it. Favorable working capital benefit prior quarter, as well as a higher capital investment. So maybe that's another explanation why it is down, despite higher achieved gold price. But again, they're making record free cash flow this year. So far, $4.5 billion in free cash flow. But we're coming to a head here. I don't think I've said it last quarter, but these companies, Newmont, Barrick, they're all looking at declining production profiles, and something needs to give. Something needs to happen. M&A. Barrick just announced recently in the last quarter the 4 Mile PEA. But that's a ways away before going into production. But they need to pull another rabbit out of their hat, or they need to do M&A, and that's sort of where I'm looking at, because this year is the market will not look favorably on this, and of course this is a short-term thing, I believe, because in Q4 we're at $4,100. They've sold last announced at let's say $600 lower as where we're at right now. So we can assume that Q4 numbers is probably going to be closer to $3,900. I think the trend is our friend. This might be a short-term sell-off, and maybe buy the rumor, sell the news kind of event, especially on the reduced what you call it, free cash flow impact here in general as well. But I'm positive 35.39. Funny enough, fun fact, I posted that on X a few minutes ago as well. Freeport was it Freeport? FCX? Yes. At the exact same average realized gold price per quarter as well. This is a bit of a shorter update because maybe one extra goodie that I saw this morning. Let me pull that up real quick. I haven't prepared, but there's one from the mining side. Stuff that we just watch, which is interesting. It's a news release from Ascot Resources. This is more from the junior mining end, but we try to bring you some interesting news and developments as well. So Ascot launched into an advisory agreement with Fiore, which is the Frank Group, a mining billionaire. Also founder of Lionsgate, a group that's making a lot of strides in the Vancouver mining space right now. And they work very closely with one person called Rob McLeod. And Rob used to work as an advisor to Ascot before, and he sold them Red Mountain with a focus on the Red Mountain deposit. As you can see here, the leadership team will be transitioned, restructured, refinancing, enhancing of the leadership team with a focus on the Red Mountain deposit. Who wants to bet that Rob McLeod is the next CEO here of Ascot Resources? They're refinancing Nabari, probably one of the worst capital providers out there, because all the companies they've invested went under or just absolute dog shite in terms of project due diligence. I'm not sure how they're doing the due diligence personally, because they've got their hands in a lot of disasters, quite frankly. But that's something I'm looking at that we're following, of course. 50-1 share consolidation. This is very sad for existing shareholders. Absolute disaster. But I think I actually still have some in my portfolio somewhere. But this is a non-effect for me here. We'll see how it goes. We always want companies to do well and advance. We'll see what that restructuring is. I'll follow it closely, but that's it from my end. As I said, it's like I'm sitting here in Singapore at the airport, had a really busy week. I got up super early, just had freeze-dried coffee this morning to get this update out. Didn't want to miss this. It was important to me to share my thoughts and insights and what I think about the gold space. If you haven't done so, hit that like and subscribe button, of course. And who's going to be in Frankfurt? Who's going to join me in Frankfurt? Maybe leave a comment down below. Really looking forward to seeing many of you join me there at the Deutsche Goldmesse. As you can tell, fantastic keynotes. Rick Rule, Alex Krainer, Keith Neumeyer, Markus Bußler, David Finch, John Forwood as well. Fantastic guys. Fantastic companies joining us as well. So make sure to sign up for that. Thank you so much for tuning in. Really appreciate you watching. I'm about to... my flight leaves in about 2.5 hours, so maybe I can get some breakfast before heading to the gate. So thanks so much for tuning in. Take care out there.